What's up everybody? Welcome to the Stocks channel. Today in the stock market we had CPI data hotter than expected and the S&P 500 closed at a brand new all-time high. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today's SPY was up 1.08%, and on closing prices, we did close at a brand new all-time high right there at the price target at 517. And this all happened even though the CPI data was hotter than expected. So if you're using a bear bias, or you're fundamentally saying if CPI came in hotter than expected, you were going to short the market, you lost today because you ignored what the price action was telling us. You could see based on the price action, we gapped up above the rising 5 EMA, we pulled back and tested yesterday's closing high, found support, and continued pushing for the rest of the day, closing at the price target above. So when you're following the chart, you have to understand this is a bull trend, which means we need no excuse or no rationality on why it's going higher. Bull trends go higher, and that's why they're bull trends. They continue to make higher lows and higher highs. So the next logical thing in SPY is if we break this price target at 517, we go higher to the next price target at 520. Now, if we get rejected from 517 and we come down here and break this support at the low right around 508 to 507, then we come down and fill the gap at 497. So again, it's a bull trend until it's not, which means if we are going to see a correction, we need to start seeing a break of support. And today, all we did was get another brand new closing all-time high. So we still don't have anything from the price action or the trend that tells us we can't continue to go higher. By the way, we can go higher than 520, but I'm not going to add more price targets until we break and close above 520. On the NASDAQ 100 triple Qs, we were up 1.43% today, and the triple Qs also gapped up after the CPI data, and a lot of you say that you can't follow price action after the data because you're going to miss the move, and that's totally bullcrap because as you can tell intraday, the price action came all the way back down to test support before jumping higher and bouncing off support to close near the high of the day. So you do have time to react. Cash is king when you're uncertain, and you always have time to react, and even if you miss a move in the market, there's always another good trade right around the corner. So forget about the people who think you can't sit in cash. That's all BS. You can sit in cash as much as you need to until you see more clarity from the price action. But with today's price action in the triple Qs, all we saw was a bounce off support and a continuation into the range that we've already been in between the all-time high and the low of support down here right around 435. So we have no break of the all-time high and we have no break of the lower range. So going into tomorrow, it's still possible this is a double top, and if we do get a rejection, it could be a lower high and we could still break support and come down to fill the gap at 425. Now, if the market is going to reach a peak and we've already seen the top, we're going to see it in the triple Qs first because without a doubt, they've been the leader. If we haven't seen the top, the triple Qs are going to break this high above 445, break the previous all-time high above 448, and reach the next all-time high price target up here at 453. If the top is in, this will be the lower high. We'll get a high volume rejection and we'll break the support at 437, and then below that, we come down and fill the gap at 425. On the Dow Jones, we were up 0.61% today, and the Dow Jones came all the way back up to the critical resistance at 391, and that is exactly where it failed to close above. So we have no clarity here of whether or not we're going to get the higher high after the bounce off of this support, or if we're going to get a high volume rejection from resistance and come down to the rising 50 EMA right around 382. So in the Dow Jones, we're only getting bullish, in my opinion, is if we can break above 391 and confirm that we are going to a new all-time high right around 400. If we cannot break 391, it is still possible this is a double top rejection or a lower high rejection, and we could still get a deeper pullback later. So watch that level at 391 for resistance, and the critical support will be right around 388. On the Russell 2000 IWM ETF, we were down 0.14% today, so we really went absolutely nowhere, and we did close down below a negatively sloping daily 5 EMA for the second day in a row, and it's still possible we come down here towards this gap fill below 202 before we find the higher low and continue to the higher price target. If we can't hold the gap fill and support zone right around 201, we likely come back down towards 196, and if we break below 196, we're likely out of the bull trend and heading lower, which could take us all the way back down towards 190. However, if we get the bull breakout and we hold above support and we break this high above 207, the next price target higher will be 214. On the ARKK ETF, we were down 0.79% today, and we came back down to support at all of the moving averages right here at 50, and if we break down below 50, we're likely coming back down towards 48 and then 47. Below 47, this is a double top rejection that brings us back down to 44, and in order to get bullish, we need to break this high above 51 and then 52.3. On the VIX, we were down over 9% today, so the VIX did crush from 15 yet again, and that's exactly what it's been doing this entire bull rally. Is every time we get a pullback, the VIX goes above 15 and then crushes back down towards 13. We're still in the crush phase with the VIX looking like this, so we could make a new all-time high as the VIX comes back down to 13. And then as the VIX comes down towards 13, we could be due for the next pullback and see another spike in fear and volatility. March is typically going to be a volatile month, so this trend could continue and we could see the VIX trading within this range between 13 and 15. On Bitcoin, we're currently trading right around 71,000, and Bitcoin is starting to find some sellers on decently high volume just below the price target at 74,000. Again, I do believe Bitcoin is reaching in a very important top before a very significant correction, and that could be right here from this price target between 74 and 75,000. You could stay bullish above 67,000, but if the bulls can't hold that breakout, we could start coming back down towards 56 to 52,000. On Nvidia stock, we were up 7.16% today, and Nvidia did get that higher low bounce, which is officially a pivot because we broke yesterday's high above 890, and it could be time for Nvidia to finally finish this bull rally and hit the full price target up there right around 1,000. Once we hit 1,000, this should be a mature bull rally that could be due for a major correction, and that could easily take us down to fill some of these gaps and test the breakout at 740. Above 740, we have the gap fill at 823, but again, it is possible we go to 1,000 and hit that price target first. On Tesla stock, we were down 0.13% today, and Tesla is holding this support zone at 173 very well, but we still can't get a bullish break above that resistance at 183. In order to get bullish, we really need to break above 183 and fully close the gap at 187 and continue to push higher. And if we can't do that, it is possible this was just a dead cat bounce before we continue to the bottom of the channel right around 160. The next bear breakdown will be the break of that support at 173. On Apple stock, we were up 0.28% today, and Apple went absolutely nowhere considering that XLK, which is the tech component of the S&P 500, and the triple Qs were up over 1.5% each. So XLK was up over 2% and the triple Qs were up over 1.4%, and Apple failed to even close above resistance at 174. So there is clearly no interest from the buyers in Apple stock, and if there is, we need to break 174 and then start running higher to close this gap at 177. If we can't find enough buyers to get to those upper price targets, we're going to exhaust the buyers and the sellers are going to take back over control down towards 167 and then 163. So the bulls need to start pushing soon, otherwise the bears take over and we continue lower. And then down here, this will be another low risk entry for Apple stock or the bull breakout above 174 for the price target at 177. So jumping back over to the S&P 500, without a doubt, even with the higher inflation print, the bull market wants to continue to go higher, and that's why it's important you have no bias and you follow the price action and you follow the chart. I still think cash is king, which means it's still a stock picker's market. There's no reason you need to chase the indices up here at these all-time highs. There's plenty of other stocks with very low risk entries, and that's what we're going to continue to focus on in the Discord server. In the Discord server, we only trade price action with no bias, so we couldn't care less whether we go higher or lower. We simply want to be on the right side of the trade and look for the best trades with the best risk-reward ratios, and make sure we're going long on bullish stocks and only short on bearish stocks. If you want to come trade with us and learn how to trade price action, come join the Stocks Channel Discord server, and you'll also get access to all of my intraday updates and technical analysis. You can find out how to join the Stocks Channel Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.